When people hear about big stock returns, they often picture expensive shares of giant companies. But here is the reality. Some of the biggest gains come from stocks priced under $5. These are often called penny stocks. They may look small, but their potential to deliver massive profits is real. Imagine buying a stock for just $1 and watching it grow 5 times, handing you 500% returns or even more. That kind of gain can change an investor's entire future. Low-cost stocks attract many traders because they are affordable. They offer a unique chance to multiply even the smallest investments quickly. But not every cheap stock becomes a winner. Only a rare few turn into multi-baggers, stocks that return several times their original price. These rare gems rise because of solid business growth, positive news, or sudden market attention. Today, we will explore how some stocks under $5 have exploded in value. We will look at why investors chase them and the serious risks involved. Stay with us, because learning about these small investments might open the door to massive gains. Investor interest in penny stocks, or low-price shares under $5 have gained huge popularity among investors in recent years. Many people are drawn to these stocks because they can buy hundreds or even thousands of shares with a small amount of money. This makes penny stocks very appealing, especially for beginners or those with limited budgets. The rise of online trading platforms and social media has made it easier than ever for retail investors to discover and trade penny stocks. Groups on platforms like Reddit and Twitter often discuss the latest hot penny stocks, driving more interest and sometimes creating sudden price jumps. However, this increased attention also means penny stocks can be very volatile. Prices can swing wildly within days or even hours, creating both opportunities and risks. While some investors make big profits, others face large losses when the stock price drops quickly. In this video, we will talk about why investor interest in penny stocks is growing and what factors are driving this trend. Understanding why people are excited about penny stocks can help you decide if this risky but potentially rewarding market is right for you. Stay with us to learn more! Risks of penny stock investments. Investing in penny stocks, those priced under $5, can be very tempting because of their low cost and potential for big gains. But these stocks come with high risks that every investor should understand before putting money in them. First, penny stocks are often very volatile. Their prices can jump up or fall sharply in a short time, sometimes without clear reasons. This makes it easy to lose a lot of money quickly. Unlike big companies, penny stocks usually have less stable businesses and weaker financials, so their future is less certain. Second, penny stocks are often less regulated and have lower trading volumes. This means it can be harder to buy or sell shares when you want, and sometimes prices can be manipulated by dishonest traders. This lack of transparency adds another layer of risk. Lastly, many penny stocks fail to grow or even survive in the long term. Some companies behind these stocks may be new, struggling, or even fraudulent. In this video, we will explain the key risks of penny stock investing so you can make smarter decisions. Remember, while the rewards can be big, the dangers are just as real. Stay informed and cautious! Spotting potential multi-baggers, finding a penny stock that gives 500% returns or more is like discovering a hidden treasure. These special stocks are called multi-baggers because they multiply your original investment many times over. But how do you spot them among thousands of low-price shares? First, look for companies with strong business fundamentals. Check if the company has growing sales, good management, and a clear plan for the future. Even though the stock price is low, the company's potential matters most. Second, pay attention to market trends and industries. Stocks in fast-growing sectors like technology, green energy, or healthcare often have better chances to become multi-baggers. Third, watch for positive news, new contracts, or product launches that can boost the company's value. Sometimes a small announcement can trigger a big price jump. Lastly, be patient. Multi-baggers don't always rise overnight. Successful investors often hold these stocks for months or years to see big returns. In this video, we will share simple tips on how to find potential multi-baggers under $5. With the right research and patience, you can turn a small investment into a huge win! Regencell Bioscience. Regencell Bioscience is a perfect example of how a low-priced stock can deliver extraordinary returns. Once trading for just pennies, this company's stock skyrocketed by approximately 64,000% in 2025, turning early investors into millionaires. But how did this happen? Regencell is a biotech firm focused on developing cutting-edge treatments. Their breakthrough in medical technology attracted attention from both the scientific community and investors. Positive trial results and promising partnerships pushed the stock price higher. The company's low initial price made it accessible to many retail investors who jumped in early. As more people learned about Regencell's potential, demand for its shares surged, causing the price to climb rapidly. However, such dramatic rises come with risks. While some investors gained huge profits, others who bought in late faced sharp corrections. This story shows the power and danger of penny stocks. In this video, we'll dive deeper into Regencell Bioscience's journey, highlighting lessons for investors looking at stocks under $5. It's proof that small stocks can sometimes bring massive rewards, but only with careful research and timing. Understanding market speculation. Market speculation plays a big role in why some stocks under $5 suddenly jump in price and give huge returns. Speculation happens when investors buy shares not just because of the company's value, but because they expect others will buy too, pushing the price higher. This creates a cycle where demand grows quickly, often causing fast price increases. A common example of this is a short squeeze. When many investors bet that a stock's price will fall by short selling it, but the price instead rises, they rush to buy shares to cover their losses. This buying pressure can send the stock price soaring in a short time. Social media and online forums can also fuel speculation. When large groups of investors share tips or hype about a penny stock, it can cause a sudden surge in interest and price, even if the company's fundamentals don't support it. While speculation can create big gains, it is risky because prices can fall just as quickly once excitement fades. In this video, we'll explain how speculation affects low-priced stocks and what investors should watch out for to avoid getting caught in a risky bubble. Strategies for penny stock trading. Trading penny stocks can be thrilling, but it demands a smart plan. First, always research before investing. Know the company's business, financial health, and latest news. Avoid stocks with little information or shady backgrounds. Second, set a clear budget. Only invest money you are prepared to lose. Penny stocks can swing wildly, and chasing quick riches is a recipe for regret. Third, check the trading volume. Stocks with higher volumes are easier to buy or sell. Low volume can trap you in a position you cannot exit easily. Fourth, protect yourself with stop-loss orders. This tool automatically sells your stock if the price falls to a set level, limiting your losses. Finally, be patient and stick to your plan. Penny stocks can be emotional roller coasters. Do not let fear or greed make your decisions. We will walk you through these strategies today to help you trade penny stocks with more confidence and less risk. Ready to discover more hidden gems? If you want to find more undervalued stocks and smart investing tips, now is the time to subscribe. And tell us, do you believe penny stocks are a golden opportunity or just another risky gamble? Drop your thoughts in the comments. And do not miss our next video. Do not save money in the bank until you watch this. Stay tuned for more secrets that could change your financial future.